Good evening, all.
Good evening.
Good evening.
Good evening, ma'am.
Very good evening. Evening.
Good evening.
Good
Good evening.
A very good evening to all of you. So, today's session, let's see about what is all about the trial balance. So, do you remember, in my previous sessions, I was explaining that trial balance, it's prepared at any stage, before preparing the final accounts, and it can be made as an option. I mean, it's not compulsory for a company to prepare a trial balance and then go for preparing the final accounts. Um, why trial balance is prepared is for two reasons. The first reason is to cross-check whether all the ledger entries are made correct. So this is for cross-verifying whether all the ledger entries are made correct. And the second purpose is to, from trial balance, the entries, it can be easily, taken for, the entries can be directly taken for preparing the final account. Even without the trial balance, the final accounts can be prepared. That is, from the ledger balance, from the ledger accounts, the entries can be directly taken. But what happens now if in case an entry in the ledger is made wrong? There was a wrong entry in the ledger, or something it has not been balanced. So, instead of purchase, it has it has been mentioned as sales, or instead of sales, it has been mentioned as purchase, or instead of cash, it has been mentioned as a credit. So, in case of any errors which has happened in the ledger posting, then preparation of the whole of the final accounts, so that will also become the final result will come in error form. So to avoid that, uh, there is an intermediate option, that is preparing the trial balance. So once it is prepared, the company can be the accountant of the company, or the accounts department can be, they can easily cross-verify, cross-check that all the ledger postings are made correct, so that from the ledger postings, or from the trial balance, directly the final accounts can be prepared. And if there are no any errors are found, immediately the errors are rectified, and then the final accounts is prepared. Okay. So it's about the meaning and definition, and we are going to see about the features, objectives, methods of preparation, and what are all the usual errors, which happens in the preparation of final accounts. I mean, sorry, the trial balance. And what is the three main difference between the trial balance and the balance sheet, and why what is the reason, and why it is important to prepare a trial balance before preparing the final account. So let's start. Is the slide visible?
Yes, ma'am.
Yes. Okay.
Yes, ma'am, visible, ma'am.
Thank you. Okay. So coming to the meaning. So it's a statement actually, it's a statement of the entries, the account entries, um, prepared with the balances. Let us know the total of the debits and the total of the credits. Okay, total of the debits and credits of the all the accounts in the ledger. So this is done to check the arithmetical accuracy. So whether all the entries are made in the correct format. So, and as well as it is prepared to check the balances, ledger balances. So if you remember in our last session, I was telling about whatever, if there is no corresponding credit, while preparing the ledger account, so that can be, made it as a balance carried down or balance brought down. So to check, whether the balances are made, to check the ledger balances, whether it is correct or not. So to cross check that, trial balance is prepared. And in case if the total and the debit and the total of the credit amount, no, like if it is equal, then no, we can be very sure that all the ledger postings, no, like all the credit and debit postings in the ledger column, no, it's perfect. It's all right, no, everything is accurate. But in case, no, like there is no, if there is a no, like error in the balance, no, the balance is not, no, like working out finally, then there is an error in posting the ledger entry. So to check the arithmetical accuracy, especially in the ledger posting, this trial balance is prepared. So coming to the definition, it's summary of all the accounts and their balances. So including the cash account, including the capital account which is being like entered in the ledger posting, all the accounts, like the cash account, the capital account, all the real accounts, whether it's a individual or it's a company or it's bank or like any third person, I mean third agents, whatever it is, all the real accounts, each and every aspect from the ledger account is like taken for like maintaining the balance in the trial balance. So it's a like it's a form of statement, and so it's an arrangement in the form of statement. So it's an arrangement of all the entries in the form of statement. And there is no like two columns. No, like usually we have debit column and the credit column. So it has two columns and it is placed side by side. So the main objective is to check the arithmetical accuracy. And coming to the features, accuracy check, part of closing process and consistency. Uh, It is prepared on no like any specified day. There is no like exact time frame to prepare a trial balance. But before preparing the final account, it's always good for the company to prepare a trial balance to cross-check the arithmetical accuracy of the ledger accounts, all the ledger postings. Okay, so it can be no like in other words, it can be said as no like it can be taken in both the aspects. That is no like it's not mandatory and it's mandatory. Not mandatory in the sense anytime no like it can be prepared, and it's not mandatory that no before preparing final accounts it has to be no like done, but it's always better to prepare to cross check the ledger postings. And it may be like prepared with the balance or totals of the ledger accounts. That is like with all the ledger accounts and whatever, including the balances, whatever is posted in the ledger accounts, everything is taken into account. Then trial balance is prepared. And the main purpose is like to prepare the trial balance. So the final debit and credit columns, it has to tally. It has to be balanced. And if it balances, then we can be very sure that it's arithmetically accurate. And not only that, uh, it now ensures the consistency across the accounting periods by comparing balances from one period to another and identifying any inconsistencies. So by comparing the balances from one period to another, so whatever balance has been like which is pending for the previous accounting year, so that is being like carried forward to the next accounting year, and that is also being taken into account. So that is not left aloof. So that is also taken into account. So that is the consistency, like it keeps on coming, like till the account is settled as a cash. Till the account is settled as a cash, it keeps on coming. As long as it is a credit sales or credit purchase or whatever it is. Okay, the main objectives. So why we should like prepare a trial balance to verify accuracy for cost reduction and for financial reporting and analysis. So other than that, like we saw like for maintaining arithmetical accuracy of ledger accounts and to help in locating the errors, that is identifying the errors which we have made in the ledger accounts. So it helps in locating the errors, and there are like many ways and rules to rectify those errors, identify and rectify those errors. and it helps in preparation of the final accounts, and it can be considered as the total summary of the each accounts. And when coming to cost reduction, it facilitates early detection of errors, reducing the cost of detecting and correcting financial errors. And no, like it presents a clear and detailed picture of the financial status of a business. So my question is like, if no, by seeing just a trial balance of a company, like will any person, no, an outside person will come to know the present financial status of the company? So if that is the question, I would say no. It cannot be no like taken as an account. Uh, but just by checking the trial balance of a company, you cannot like assume or like ascertain that a company is doing making profit or doing a very good like or it's in a very good position, and they will be like excelling in the future. So only by seeing the profit and loss account and the balance sheet, we can come to a conclusion. So trial balance is only for the company's records and not for the outsiders to make any decisions. If it is for outsiders, final accounts is their choice. And for the insiders, that is within the companies, it is the trial balance. Clear? As of now, clear?
Yes, ma'am.
Oh, fine. So let's see, there are few methods for preparing the trial balance. The main being balance method, total method, and reconciliation method. So balance method and total method are these two are conventional methods. It is like the oldest form of the preparation for preparing the trial balance. And reconciliation, the bank reconciliation method, that is being like newly added. Newly added in the sense, for example, from the beginning of the century. Okay, so it's newly added, and three methods. The balance method, it's a most commonly used method for preparing the trial balance. The very most common method. So everyone know, almost all the companies know their first choice is like going with the balance method. That is the debit column, the credit column on the left hand side and the right hand side. So taking all the ledger postings and posting it on the debit columns and the credit columns accordingly, and finally balancing the account. Okay, so that's the balance method. So if finally everything is balanced, then yes, all the ledger postings are right. But if there is no any imbalance, then there is a mistake in the ledger posting. So we have to identify the the error, and we have to rectify those errors. So, and then the second one is total method. So this method, it is a series of grouping and totaling the debit and the credit balances of each account. And then finally, adding them in the summary sheet. So we will be grouping and totaling the debit and credit balances. And then finally, you will be adding in the total summary sheet. Then again, the same criteria. The final balances, it has to know it has to be balanced. The final results, of the debit and credit, it has to be balanced. Okay, to make sure ledger accounts are perfectly fine. And the third method, the new method is reconciliation method. So this method, it makes sure that the total balances, it has the same value in case of any discrepancy, and again identifies the errors and rectifies them. So while using this reconciliation method, we have many other ways to identify those errors in case of any discrepancies. So we will see that one by one. Okay. And now we will see what are the common errors which happens in the trial balance preparation. The first one being the mathematical error. That is, errors in the calculation or the data entry. That is the transposed numbers, or no, that transposed numbers means you're leaving a number, or no, instead of making it as like as a 10,000. If you want to post it as 10,000, you're adding one more zero, or like you're like missing out one more zero. So it may be like made it it can be like posted as 1 lakh, or be maybe posted as 1,000 instead of 10,000. So like these mathematical errors. And while calculating, finally when you're calculating everything, adding up everything, and that like finally comes to some error. Okay, the total calculation, like there is an error. So these kind of mathematical errors may happen. And wrong account balance, that is entries in the incorrect accounts. So you're completely posting in the wrong account. That is, instead of posting in the debit column, you are posting in the credit column, and vice versa. Instead of posting in the credit, you are posting it in the debit column. And duplicate entries. You're like duplicating the entries, like so that is also a wrong account. That shows the wrong account balance. And sometimes you may miss the entries. Few entries, like from the ledger accounts, you may miss it out. You may think that like for example, if it is a capital account posting in ledger accounts, so it may be yes, like capital account debtor to cash account. So you would have posted the capital account in the debit column, but you might have missed the cash account, so mentioned in the credit column. So in that way, there is a like you can find the imbalance at the end. So these type of wrong account balances, that can happen. And unadjusted entries. That is, unadjusted means, so even after like posting everything in the correct way, and while calculating everything in the correct way. And finally, if you go with the final calculation, when you sum up everything, so you might see there is like lot of differences in the debit and credit. So then there is like I mean the final accounts, it's not being balanced. So in that case also, like you may feel that some some entry may be like maybe wrong, in the ledger account. So these may be the common errors, which we usually like which usually happens in the preparation of the trial balance. Clear? Okay. And other than this, we have like more errors, that is errors of omission, uh, errors of principle. Yes, errors of omission, errors of principle, errors of commission, and compensating errors. That is, errors of omission means, as I said, like you're omitting, you're like completely forgetting, like posting a entry. So that is errors of omission. And errors of commission. So errors of commission is like completely because of carelessness, or like complete because of there is no concentration while preparing the accounts. So in that case, these kind of errors of commission may happen. So like wrong entry, and entering the making the entry in the wrong book, and with the wrong casting. So like everything, like all these comes under the errors of commission. And errors of posting, that is while posting, like on the, instead of right amount in the right side, okay, of the, but like it may be in the wrong account. You may be posting the right amount in the right side, but it may be in the wrong account. Or you may be posting right amount on the wrong side of the account. So in this way, like there will be many errors, like happening. And errors of balancing. And finally, when you're balancing the accounts, like while doing the calculation, you may not find any mismatch. So in these ways, like errors may happen. Then how will you compensate the errors? So how to compensate the errors? So there is a rule, like while preparing the trial balance, there are a few rules to compensate the errors. So we will just see an illustration of how the trial balance looks like, and how the trial entries are posted in the trial balance. And in case if there is no any imbalance found, so how that can be rectified. Okay, so that we will see. Okay, and before that, so what is the difference between trial balance and a balance sheet. So balance sheet is something which is prepared at the end of the financial year. So that we already know. So the main difference between, like not only the date of preparation, there are many other differences also. That is, like why it is being prepared and the format. The format, like both have different formats and difference in usage. Why, where, like it is used. So we will see one by one. The purpose. The purpose of preparing the trial balance is to verify the ledger accounts, to verify the arithmetical accuracy of the ledger accounts. But for preparing, but why we are preparing trial like balance sheet? It's like it's to show the financial position of the organization for the stakeholders. So that is the main difference. And difference in format. So when I show you the format of how a trial balance looks like, you will clearly understand how the format looks like. And finally, difference in usage. So who uses the trial balance and who uses the balance sheet? So trial balance, it's for the internal use, internal purpose. So all the departmental heads, all the any employee of the company, the top management, the worker management, middle management. So for them to cross verify any of the accounts being posted in the ledger, or to know rectify any errors which has been posted in the error, the trial balance is prepared. On the opposite side, the balance sheet, like who uses the balance sheet? It's for the stakeholders. So whoever the parties are interested in the organization and even the potential investor. So for them, the balance sheet is prepared. Okay. So other than that, the trial balance usually, like it adds up all the ledger accounts and finally checks the whether the debits and credits or no, like it's being equaled. But the balance sheet, it doesn't go with the equalizing the accounts. It doesn't go with the equalizing. It doesn't go with the balancing of the accounts, but the balance sheet is a summary of like all the organization's assets, liabilities, and like equity, the shareholders' equity. So only in trial balance you have to make sure that the final accounts okay. Good. So trial balance, you can see finally the both the credit and debit columns are being balanced. Even if it is not balanced, there is a rule to balance it. But while preparing the balance sheet, you don't have to finally go with like ending up in balancing everything, but you have to make sure like all the entries, all the transactions and all the entries regarding the organization's assets, the liabilities and the shareholders' equity, and everything is being posted in the balance sheet because it shows the financial position of the company. So any stakeholder has to know like how many, like what is the total asset of the company and what is the total liability of the company, how much they are liable to pay to the outsiders, and what is the company's shareholders equity in the company, how many shareholders are there, and what is their equity in the company, what are the revenues and incomes and no expenses and profits and losses and gains. So everything the stakeholders has to know. So all those entries, you can see it in the balance sheet, whereas in trial balance, you won't be seeing those entries. So you will be just seeing the entries which is being posted in the ledger. Summarizing all the ledger entries is the trial balance, whereas summarizing all the assets, liabilities, and the shareholders' equity is the balance sheet. Is it clear?
Clear, ma'am. Clear.
Yeah. Okay, fine. Okay. So why we should know prepare trial balance? So this we have already seen, but no we have no few more points to discuss. So assurance in financial data. That is, it guarantees the accuracy of financial data and giving accuracy assurance to investors, banks, and other stakeholders. So, if you're making an entry, in the accounts, it means the transaction has actually happened. You cannot know uh, make an entry out of a speculation. So speculated things or speculated transactions, it cannot be made as an entry in the accounts, or something which is going on as a talk. For example, the board of directors may be discussing merging the company with the another company, or investing in new venture, or what do you say, getting a bank loan, or paying to the long term creditors, settling of the debts. So these are only the talks happening, but the transactions has not happened yet. So since these are only the talks, or these are only, the assumptions and speculations, so that cannot be, posted in the accounts. That cannot be made as an entry in the accounts. Okay. So if there is an entry in the account statement, it means the transaction has actually happened, which know that each and every transaction has a money value attached to it. So if it is a cash transaction, yes, there is a money value. A credit transaction, of course, there is a money value attached to it. Either the company is obliged to pay in the future, or the other person or other companies are obliged to pay to the organization. If it is a tangible asset, yes, money value is attached, and intangible asset, yes, of course, the money value is attached. So all the information or all the aspects which has a money value attached to it and which has actually happened. Okay, so only those things can be made as an entry in the accounting books. So just by speculating, or just by forecasting something, or not just because of no assumptions, or no something is going on as a talk in the company or in the organization or in the whole industry. So those things, it cannot be accounted in the uh, accounts books. So it means if it is a there is an accuracy of financial data for each and every entry. There should be a proof that this has actually happened. So that is the company's responsibility, every accounts person's responsibility, whoever is preparing the accounts, or the accounts department's responsibility. And only because of this, you can know as a company, or as a part of the company, you can gain the assurance of the potential investors and the banks who are who will be ready to lend to your business, and other stakeholders who would like to be a part of your organization. And if you're registering or updating any false data, like we are seeing in the news channels, we are hearing about news that um, one or two companies has falsely proposed that they have merged, or they have invested something big, which has not really happened. The recent company, I think the Adani Group. So they were into this thing. So there was a rumor, or no, maybe actually happened. We don't know the authenticity, but that it happened that this group has in their account statement, they have mentioned falsely that they are doing very good in business. They have invested more, and they have done some mergers. They have like procured like a lot, for going with the manufacturing or transportation or production, whatever it is. So because of this, what happened? It attracted the potential investors. So people started investing more on the company, and it attracted the say stakeholders, and everybody wants to like have a share of Adani Group. And Adani Group is just one example, one simple example, but there are many organizations, like doing this, thing. So it's not like it's a offense. So this shouldn't be done. Like if it is proven, they may face criminal charges. Like it's completely offensive. It's against law. So this shouldn't happen. And it's like playing a root game in the share market. Okay, like just by speculation or just by creating a hype that something good is happening, or uh, you cannot attract the stakeholders. So if something has happened, it has to be entered in the statement of the accounts. So it has to guarantee that the stakeholders, I mean, all the parties involved in the company, whoever is interested in the company, so they have to trust the company. So only the transactions which has actually happened, so that has to be, made as an entry in the account statement. And the second point is reduced risk. So ensuring accurate financial records helps companies avoid legal repercussions and other financial risks. So anytime when the accounts is rightly done, all the entries are rightly made, prepared. So anytime when the government or when the law, so the body is responsible for auditing the accounts stream, like whenever they are asking for it or coming for an inquiry, the company, the organization can boldly uh, show the the all the details of their account statement. So produce what has happened in their company so far. Okay. And if it is not being done, for example, if the company is not preparing the account statement on a regular basis, if they are not missing out even the smallest entry, if they are missing out, that may add up to the imbalance in the accounts, and that may create a great headache while preparing the final accounts. So that has to be avoided. Okay, so it gives risk can be reduced. So prepare make all the entries which has actually happened. Otherwise it's better to avoid all those speculated things and all those which are in talks. And then improve the decision making. So of course after the preparation of the trial balance, any company, the management will come to know what is the position of their company, financial position of their company for that particular time period, that particular time period. Okay. So it can improve them, it can help them in decision making. For example, say if the liabilities are more, if accounts payables are more, so it means the company is obliged to pay more, so that it has to work more on profit making. So only after profit making it can pay the all the creditors. And for example if a bank loan or bank overdraft hasn't been paid for so long, so it's still pending, so the company has to make sure it is cleared off then and there as soon as possible, to gain the confidence of the bank. Because it cannot be kept for more than 1 month or something, there is a time period, time limit. So it will gain confidence from the bank, so bank will believe the organization, and in the future they will always give a helping hand while when the organization is asking for it. Okay. And there are many creditors or many accounts receivables, there is a lot of accounts receivables pending. It means the company is still yet to receive more money from the outsiders to whom they have given the service. or to whom they have given their products. So in that case, they have to collect the money as soon as possible because they have to run the business. So they the first focus will be on collecting all the accounts receivables. So whoever has the highest amount, so the company will start asking for it. So at least a part amount they will be asking for for the payment of the part amount. So in that way, they can collect all the money to the organization. So the organization doesn't have to uh, have a stand in between. Okay, so in this way, the management can take any, decision with the help of the preparation of the trial balance. So it always helps the insiders, that is the people within the organization, to help them in decision making and to make them risk free and to assure whatever has actually happened is being recorded and whatever has not happened, it is not being recorded. So this is the three most important points of preparing the trial balance. Clear? Is it clear?
Yes, ma'am.
Okay. So I hope no doubts as of now. So let's see, how a trial balance looks like. Okay. This is an example of a company called Gold City Consulting Incorporation. And 1 second. Okay. Yes. So Bold City Consulting Incorporation. Yes. The first entry you can see, it's a cash transaction, and it's in the debit column. $9,750. Then accounts receivable. Accounts receivable means the company has made a credit sales to the outsiders, and those people are yet to pay as a cash. So they are obliged to pay as a cash payment to the company. So those things it comes under accounts receivable. And then supplies and equipments. So equipments means all the machineries. It represents all the machineries. And accounts payable. Payable means the company is not obliged to pay to the outsiders. They might have done a credit purchase. So that is all the credit purchases. It comes under accounts payable. And then notes payable. Okay, I will discuss about this notes payable in our next session. So common stock. Common stock is something, it can be, stock, of course, we know it's a finished good, right? The finished merchandise, which is ready for the sale. So common stock. So that is $10,000 value. And dividends. Okay, dividends is something, which is paid, which can be taken as an interest to any deposit made by the company. So that is dividend. And service revenue. Yeah, service revenue and notes payable. I will explain it to you, in our next session. Salaries expense. So salaries paid. Okay. So it comes under expenses. So salaries expense is $1,350. Rent expense again. So salary, rent, utilities, all three comes under cash. Okay, so salaries has to be paid as cash, rent as cash, and utilities, all the electricity charges, water charges. So those are utilities. So again, that also has to be made as a cash payment, even though it is not mentioned as as a cash payment. We have to take it it has been done as a cash payment. Okay. Or sometimes, if it is not a cash payment, the entry would be like salary paid as check, or rent paid as check, or utilities paid as check. In that case, it would be the entry would be like salary account debtor to bank account creditor, because it's going directly from the bank. So because you're issuing the check, the organization is issuing the check, and the amount would be debited from the bank account, organization's bank account. So it would be salary account debtor to bank account creditor. So this is how it is done. So these things, no, it comes under debit column, and see what comes under credit column. So under credit column, you can see accounts payable and notes payable, common stock. So common stock is an asset to the company, but why it is not like mentioned in the credit column? Because it has to go out of the company. Even though it is a no asset to the company, it cannot be kept in the company for a longer time because you have to sell the stock to make profit. So it has to go out of the company. It has to move out of the organization so that profit can be made. That's why, no, like it has been mentioned in the credit column. And then here, service revenue. That is revenue, as I said, no, like all the income which is being gained by selling the stock, okay, which is by gained by selling the products made by the company. So that is considered as the revenue. Okay, so that comes under credit column 5,750. Okay, and yes, so those things it comes under credit column, and the other ones, that is cash, accounts receivable, supplies, it comes under debit column. So we will discuss, no, like in our next session, each and every entry, that why it is being, no, like why this particular entry is in debit column and why this is in credit column. So when you add up both the columns, so it has to be balanced. It should be balanced. It should be equal. If it is equal, so if you see debit summarization and credit summarization, both are equal. If it is equal, then it means all the ledger postings done. So from which these entries are taken, all the ledger postings are accurate and error free. If there is any imbalance here in the balance statement, either no like one is in the one is higher or one is no like lower, then it means no there is a error which has been committed in the ledger posting. So we have to identify where the error has been committed, and then we have to rectify the error. So for that we have no few rules, no, like to identify the errors and no rectify the errors. So we will see about that in the next session. Clear? And we will see and have a no like 2 to 3 examples of how to make a trial balance entry from the ledger posting. So we will see like how cash account like from the ledger posting can be taken to the trial balance entry and where it has to be posted. In the same way, if it is like purchase returns or like sales returns or drawings account or whatever it is, like how each and every ledger posting should be can be taken to the trial balance, and where it comes under which column it comes, whether it comes under debit column or comes under credit column, and why. What is the rule? What is the rule to make it as a debit entry or credit entry? Clear?
Ma'am, can you give the example for revenue?
Okay, revenue is something, like whatever is the product of the company, whether it can be a tangible product or it can be a service. Okay, so whatever the company is, like making and selling it to the customers, and whatever they are getting out of it, getting out of it by selling the product, so that is considered as revenue.
It's type like a asset, na, ma'am?
It actually, like it cannot be considered as an asset, but it can be considered as a profit. It's a profit to the company. So with that revenue, like they can go with the other operations of the company. They can procure more, they can produce more, they can market more.
Thank you, ma'am.
Yeah. For example, if the company is having a building and they have like rented it out, so they are collecting, the company is collecting their rent. That doesn't come under revenue. So that will come under incomes. But if the company is like selling a product, like towards like customer or like to another company, and the other company who has purchased that product or purchased the service from the organization, is paying back to the company, then that is considered as revenue. Clear?
Yeah, clear, ma'am. Clear.
Yeah. Okay. So any other doubts?
Hello, Assalamu alaikum.
Yeah.
I am a Muslim and I'm coming to this competition right now. I don't know what is going on the fast. I think 15 minute fast back, right?
You mean you have joined recently?
Yes, I'm coming to this Zoom competition right now. So I don't know what is going on there in the first 15 minutes, right?
Okay.
I wanted
At this,
I wanted I wanted you to elaborate it for me
okay.
in short time because of the time moment, right?
Sure. This is not a competition, but no, like it's an online session, for accounts. So we were discussing about, like what is a trial balance, how it is prepared, why it is prepared, and
Oh,
yeah, what are the advantages and like disadvantages. So there are like few methods of preparation. So we were discussing about it. So this meeting, like it's recorded, and after the session is over, the PPT will be shared to the representatives, and they will be sharing it to all the participants. Okay, so you
okay,
can receive the PPT, you can go through it, and we will like every week we will be having this session. So next Friday we will be having the same session, the account session. So
oh,
whatever doubts you have, you can make a note of it. We will discuss about it. We will rectify all the doubts. We clear off all the doubts. Okay.
all right.
Yeah.
So is there any handout or PDF that you are going to send us through
Yeah.
our?
Obviously, I will be sharing it. Yeah.
Okay, no problem. Uh, and I have a question.
Yes.
So my question is this the first time are you going to meeting on this time moment?
This,
Or
I
not?
think we are on the seventh. This is the seventh session of the accounting. The topic accounts. So we are
Okay,
on. Yeah.
all right. We are going to discuss about it in every day or every Friday.
Every Friday, exactly.
Okay, by 6 o'clock, right? By 6 p.m.
Yeah, yes. As per your time, yes.
Right, no problem. Because of the reason why I'm asking you, this is my first time.
Okay.
That is why I ask you some question like that. I
No
hope there
problem.
is no problem on it.
You can check with the representative, and you can ask for all the the PDF files, whatever I have shared as of now for the accounting sessions.
All right, no problem. Thank you so much.
You're welcome.
I really appreciate it.
Thank you.
Okay, thank you.
So guys, let's meet next week. Okay, so we will start preparing the trial balance from next week onwards. Okay. So there is no doubt. Yeah, we can end up the session, and happy Diwali to you. Bye. Have a great weekend.
Thank you, ma'am. You too. Have a
Thank
great
you.
evening.
Happy Diwali. Bye-bye.
Thank you. Bye.
Thank you, ma'am.
Thank you.
Thank you, ma'am.
Thank you.
Thank you, ma'am. Happy Diwali.
Thank you so much. Bye bye.